Welcome to Find the Highest Probability Trades. I'm Dan O'Connor, webinar organizer. Our presenter today is Fausto Pugliese, founder of Cyber Trading University, with an introduction by Mark Chaikin, founder and CEO of Chaikin Analytics. The presentation will be followed by a brief Q&A session. It is also being recorded and will be sent out to all registrants. I'm going to turn the program over to Mark now.
Thank you, Dan, and welcome everybody. Today's presentation is meant for active traders, day traders in particular. And we know that a whole subset of Chaikin Analytics community is interested in day trading. Fausto Pugliese has been an active trader for over 25 years. He is a teacher as well as a trader, and I know that his presentation about 4 months ago was one of the most popular guest webinar presentations that we've brought to you. So I think that what Fausto brings to the table is summarized in what he calls his 10 commandments of trading. And they really deal with the supply and demand of the active trader and how you take advantage of the information that's available to become a more successful trader. And I've seen the comments on his website from people who've learned the 10 commandments in Fausto's courses and every day in his chat room. And I think that this is really valuable information if you're a short-term trader. So with that, it's my great pleasure to introduce my friend Fausto Pugliese. So take it away, Fausto.
Mark, thank you so much for having me. Thank you, everyone, and everyone, all the fans of Chaikin. Thank everyone, Analytics. Thanks for coming here for this afternoon. Hopefully, everyone's not exhausted after the elections that we had and expecting what was going to happen in the market. But we have a good show for you today. I'm going to talk about how to find the highest probability trades in the market. And before I get started, I just want to do a quick audio check with myself. Could everyone just give me a chat back in the questions? Just let me know if you hear me okay. Thanks a lot, Bill. Excellent. See if anybody else, just make sure everybody can hear loud and clear. Maven, Sandra, Bruce, Frank, okay, Fran, John, good, good, good. And just out of curiosity, before we get started, have any of you guys ever seen me do a speaking before? Just give me a 1 if you did, 3 times, a 3, just out of curiosity, an N for a no. Never, never. Just want to know if we have some people, oh, once, okay. Got a few of you that said yes. Excellent. All right. Well, for some of you that did see it before, it's going to be a little different than some other ones, but the concept is the same. So let me just get right into it, and let me just change the slide here, ladies and gentlemen. Before I get started, I'd like to tell you some of the things we're going to be learning. I'm going to talk about discipline. I'm going to talk about trading journals. I'm going to talk about what is high-frequency trades. I'm going to talk about the KISS method. On the chart, I'm going to talk about stocks we've traded and much, much more. And just like Mark has mentioned before, I'm going to talk a little bit about some of the commandments, the 10 commandments we talk about. And the 10 commandments that Mark is actually mentioning to you, which a lot of us do the same thing. It's about finding stocks and not getting caught up in getting, what's that word I'm looking for? Different, when you get multiple share trades, you're getting, different ticket charges, broken up tickets for different shares. There's a way when you look at a stock, you got to make sure it has a good spread. You want to make sure that you're not having a stock that is trading with a big spread and so on. You got to remember there's 2 things in order to make money in the market. And it's not a ticket charge. That's one of them, but the biggest one is the spread. Okay, that's one of the biggest things we're going to focus on, and we're going to talk about all those things. Now, just keep in mind, ladies and gentlemen, we're very short for time. We have less than an hour to go through it, so I'm going to try to talk about as much as I can. And you know what? I'm going to ask questions, so be prepared to get involved and ask questions, because if you don't ask, you're not going to learn. So, just a quick little bio about who I am, so you know a little bit about myself and about Cyber Trading University. Right there is a photograph that was taken last month. I rang the closing bell with the Money Show. You can see right in the middle, that was Steve Forbes. Steve Forbes actually wrote an article on active traders, a bunch of kids tormenting Wall Street. Well, I was one of those kids. When I first started, ladies and gentlemen, there was about 1,000 traders in the world. Now there's over 10+ million around the world. Now, I started Cyber Trading University back in 1995. I was about 22 years old, and obviously, I guess you can get it pretty quick. You probably know how old I am. But the way I got into trading, ladies and gentlemen, is that before I was a great trader, I was also a very bad loser. I lost a lot of money trading because I thought I knew how to trade and never realized that trading is not as easy as people think it is. I was doing everything that was opposite when it came to trading, and that's what I'm going to educate a lot of you today, of the things we do not want to do. And one of the things is, most importantly, is not having a mentor. You know, somebody to show me. One thing my father always taught me, he says, son, you want to be very successful in business, okay? Because we all want to get into a business that we're doing, and trading is a business. You have to learn from the best people in the industry, because you'll learn all their mistakes and you'll learn all their secrets, okay? But trying to go out and figure it out on your own is not going to work. All right, and that's why Mark has me here today, because we know that some of you here like to actively day trade, okay, in the market. But the question is, do you know how to do it right? And that's what we're going to be talking about. One last thing I just want to kind of tell everyone, I'm also a 12-time champion at the Money Show. I beat every single school that I competed against in the World Challenge. I went to China, I went to Paris, Canada. You said it, I was there. And also, I just launched my Wiley has just launched the first day trading book that I've written in 20 years. Last one was the Souls Bandits. And I'll tell you at the end of this presentation, if you guys want to read it, I think it's a really fun, fast read for all of you. So let's get right into it, ladies and gentlemen. Let's start learning how to trade in today's markets. Let's start learning how to do things right, because that's why we're here. And basically, let's talk about one of the mistakes, first of all, that people make. And that is, why is 70% of the people fail in trading? Well, what you're going to learn and what we're going to talk about is that the reason why it's such a very high failure rate is that people have to realize we're not investing. Okay, trading is a job, and you have to know how to play the game. Now, a lot of you here are using certain tools, certain features, and all that good stuff, but every one of you, in my eyes, is being a professional. If you're looking to be a professional athlete, well, professional athletes never stop training. And the thing is, 90% of your time is spent on education, 10% of your time is spent on trading. Now, let's have a game plan how to do that. Let's talk about one of the biggest, #1 rules that you should never do when it comes to trading. This is like the biggest failure rate of today's industry. Do not open a brokerage account. Now, everyone's like, what are you talking about? Isn't that the whole game? Yes, but the thing is this. You have to learn how to drive before you go buy the car. And the thing that I always find is that everyone goes out there and they want to learn how to trade first. And there's so many brokerage firms. People always ask me, Fausto, what do you think of this company? What do you think of that brokerage firm? Well, every single one of you are a case-by-case basis. Maybe you're an options trader. Maybe you're a futures trader. Maybe you do everything. Maybe you're in different parts of the world. You can only open up a brokerage account with certain people. And not only that, there are some brokerage firms that have great features, like Mark's got great features, on the TradeStation platform, and with his indicators and there's certain tools. Everyone's got great bells and whistles, but the question is, don't worry about a brokerage account, okay? Because this is what I always find. People go out there and they said, let me go out and try it first. If I like it, then I'll go out and learn how to do it the right way. Well, that didn't work too well for the patient that went to the hospital when the doctor said the same exact thing to him. Oh, I want to be a doctor, but let me see if I like being a doctor first, and if I like it, then I'll go to med school. Yeah, that's the one I want to work on my children, okay? And we all know that. And the reason what I always find that people make is they automatically open up with online brokers, and online brokers are good companies, okay? But they're not for everybody. I mean, I would not actively trade with, with some of the online brokerage firms that are out there, the Scott Trades, the E-Trades, the Ameritrades. I mean, but depending on what account that they offer you, we do a lot of education for them. I do a lot of speakings for some of them, but you have to make sure you have the right brokerage account with them and not the wrong one. So online brokers, you have to make sure you know exactly what you're doing, and that's where the education comes into play. Now, but the first thing people want to look at is they want cheap tickets. It's one of the 10 commandments, okay? First thing people ask me, oh, how much are you paying a ticket charge? How much ticket? Listen, if you can't afford the gas, you can't afford the car. So go back to public transportation. There are two different types of trading that is out there. There's direct access and there's online brokers. So don't ever look at because you think you're getting a good deal on a ticket charge, because you'll end up doing more harm than good. Now, we're obviously looking at this picture right here. We all can see, I think we're a little bit smarter than that, right? Well, for some of you that are trading the market, like I told you, one of the biggest mistakes, one of the #1 cardinal rules that I was trained by my mentors, and the reason why I failed is I opened up a brokerage account, didn't learn how to do it, and then when my mentor found out who my broker was, he was lucky I didn't lose more than what I had into it. So that's one of the major 10 commandments you have to learn. So sometimes if you notice that your tickets are delayed and you're not getting the active trade execution that you were planning on it, well, now it's time, like what Clint Eastwood would say here. Sometimes if you want to see a change for the better, you have to take things in your own hands. So understand something. What's great about about trading, you now could be a trader on the floor. You can actually go out there and become what's called a market maker. You could place bids and offers. You can compete against Goldman Sachs. You don't need them anymore. You don't need Schwab. You could do it all yourself. You could see your orders out there. Everything. You could cancel it. Think about it. You've been dealing with public transportation your whole lives. You are now capable of driving your own car. Ever notice when you look at the New York Stock Exchange, the floor of the exchange, there's no one there anymore. It's not packed with traders. Everything is electronic because the brokerage firms want you, the exchanges want you guys to start taking matters in your own hands because they don't like the idea that these brokerage firms could dictate prices what they thought the price should be. Why do you need them for? Why can't you do it? And by the way, the more people trade, the more money the exchanges make, and that was another reason too. So let's talk about rule number 2. Learn how to trade. Learn how to use trading software. All right. Now, another mistake that I find, and I know Mark does a very good job explaining it because he was just on Cyber Trading University on using his analytics. But the thing that you guys have to remember is that you have to learn how to use the platform right. 80%, and Mark will tell you this, 80% what they offer you, maybe 70 tops, 70, 80%, a lot of these bells and whistles you don't even need on the execution system. Because the reason why they have so many bells and whistles is they're trying to accommodate investors, day traders, options traders, swing traders. You got a gazillion, indicators, a gazillion charts, everything. And one thing that all of you need to know is you need to know how to simplify the execution system. I know when I first look at an execution system, I was totally lost. All right, and I was actually about a month ago when you saw I took that picture on the New York Stock Exchange. I was actually doing a speaking at Meet the All-Stars. In New York, the Money Show ran a big event for all the big All-Stars. Everybody was there. All the popular, the J.J. McKenna's and the Macmillan was there, and Tom Sosnoff was there from Thinkorswim. All the big options traders. And the one thing I noticed a lot of people asking me, they wanted to learn how to trade options, and I was like, listen, everybody here has a great way of learning how options. One guy has a better way of others. But before you learn how to trade options, you got to learn how to trade the stock. because it's the movement of the stock that makes the option move. And then from there, by understanding that, if you still don't, now you still want to trade an option. I don't know how many of you here trade options, but I mean, I love options. But the thing is, a lot of people says, well, I'm scared. I don't know which one's going to work. You know what? Just go out there and just do an execution. Just buy a one lot. See what happens. What's the worst thing that could happen? You lose money? Mark would tell you the same thing. If you're scared to trade, trading is not for you. The only way to get what's called trader's block out of your system is you have to start trading. And the thing is, if you don't understand the execution system, then obviously, you got to tone it down, because the execution system is your vehicle. That's your car. That's your motorcycle. That's your bicycle. That's going to get you around town. And if you don't know how to use it, you know how scary it is driving with a teenager and never drove before. It's the same thing. You have to get used to understanding how to use the system. Because what I always find, I look at some people's execution system, I see things like this. I'm like, what the hell? I mean, how do you read that stuff? But there are people out there, they think they have to learn everything that's out there. And then you know what happens at the end of the day? They don't even do any trades. Nothing. They're done. They don't do anything out there. So that's why I love this photograph right here, is that sometimes, do you feel like this, baby? You're sitting there scratching your head, and like at the end of the day, it's 4 o'clock, and like, well, how many trades did you do? Like, none, because you're sitting there being too over-analytical on what's going on. So I usually come out with something calling the KISS method. Keep things, keep it super simple. And the thing, when you keep it simple, it helps you become better to understand how to get in and how to get out of the market. Now, rule number 3, timing during the day. All right. Now, as a day trader, I want you guys all to understand that day trading is a part-time job. It's not a full-time job. And I know a lot of you here would like to make trading a full-time job. And I know some of you here, but it's not. And there's some of you, your eyes are like jumping out of your head and like, yeah, that's exactly what I need. I need a part-time job because I do work, and I need to do it on my part-time. Well, let me explain to you one of the biggest keys when it comes to trading. There are certain times to trade certain exchanges. If it's futures, if it's options, if it's stocks, and I want to talk about the stock market right here. Here you have an example of a 1-minute chart. Okay, and if you look at the time with the arrows, okay, one thing that I teach everybody, I teach a lot of my students, and I'm going to invite all of you, by the way, if you guys want to come and join me, tomorrow and Friday I'm going to be continuing what we're doing here. It's a free event. You guys are more than happy to come. But I usually do most of my trades in the pre-market, okay? Now, the question for everyone here, I know I haven't stopped and asked any questions, sitting here talking away, but does anyone here ever done pre-market trading? Anyone ever see pre-market or what happens in pre-market? Does your brokerage firm allow pre-market? Fran, you never saw it. Okay. Anyone else? What about you, Richard, Larry, Kent, Vicky? Only one of you? Vicky says just a little bit. See, but not active, Bruce. Okay. Bill, you too scared? Don't worry, Bill. There's nothing to be scared about, okay? The only reason why you're scared is probably someone never showed you what you're looking at. Actually, most of the profits that traders make are in the pre-market. And let me explain to you why. This is what's a great thing about the pre-market. There are a lot of people out there that will do their trades and will place their orders from the night before, or they're sitting there and they're watching trading, but their brokerage firms will not allow them their orders to get executed until 9:30. When the orders go out, and you don't get automatically executed at 9:30. So what happens there, ladies and gentlemen, is that all these brokerage firms see all these orders coming in. They know who's buying it. They know who's selling it, okay? So they have VIP service, access before the rest of the world has access to the market. So as a day trader myself, and this is something that I teach you, and you'll see it, I can't do it now because the market's closed, but you'll see trades going on after hours or pre-market, and that will give you an indication of where the buyers and sellers are going, which we're going to talk about in the next few moments, which is called the high-frequency trades. You get to see all those orders, and if you look at an example like here, timing during the day, let me get my crayons out here. If you look right here, and you can see all this activity of a stock, how it's moving, and then right at the open, you can see how this stock just had a huge run, how it literally ran almost 50 cents in a matter of, what, 15 minutes? Not bad for a day's pay. So think about it. If you bought 1,000 shares of stock, made a very small investment of 3,000, you made 50 cents on 1,000 shares. It's not bad. 50 cents. 500 a day, it's 130,000 a year, 20,000 a year. Who doesn't want that job to work 15 minutes? And that's how trading is. And I'll be happy to show you some that even did it today. But trading, what happens is that, and this is why this happens. You're probably asking me, like, well, how do you know it's going to happen? Well, you have to remember, I want you guys to take all your eyes off the screen. Look at one of your doors. Think of all these orders getting filled out outside your door. Okay, and then what happens, those orders cannot get executed until they come in your room. But because you have VIP access, you're in the room and cutting deals and seeing who's actually routing those orders, because they already know who's out there they got to fill orders to. And then once those orders come in, boom, these orders get executed, and that's why these things take off, these stocks take off. So timing during the day is a very, very critical time to trade. Here's another example. Here you have a stock that went from, right at the open, you could see all the pre-market at 7 o'clock in the morning. You got a lot of action that's going on, and then right at 9:30, boom, the thing goes from 635 all the way to 690 in a blink of an eye, in 15 minutes. So just want to let you know, when I train my students, and hopefully I'll get an opportunity to show you guys this, but you'll see over the course of the day, traders spend only 10% of their time trading. 90% of the time is learning. It's like, anyone here follow sports? Anyone follow football? Okay, football is what, 60 minutes on a Sunday? Well, but they don't just show up on Sunday like we do to go to a game and say, okay, I'm ready to play, guys. No, they practice from Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. I mean, they prepare. And they work from 7 o'clock in the morning till 8, 9, 10 o'clock at night. Why? For 60 minutes. Okay? Because that's where they make their money. And as a trader, and Mark will tell you this from experience, that we spend more time learning than trading. And the thing is, we want to learn from those mistakes, because if we know why we make those mistakes, we're not going to do that again. And if we make money, well, obviously, it's not a good thing if we don't know how we did it. So the whole purpose is learning. Now, let me change the slide here again. Now let's talk about rule number 4, following the money. All right. Now, this is where it was a huge wake-up call for me. This is when I went out there and I realized that I've been trading blind my whole life. This is probably one of the best parts of what you're about to learn right now. And I know everyone here wants to know what to buy, entries, exits. Ladies and gentlemen, think about this for a second. And I have a question for all of you. Okay, can everybody answer this question? How many of you here trade in the stock market? Can everybody just tell me? Just give me a yes if you trade in the stock market. Okay, and can everyone just give me another chat back and let me know? I should have asked this earlier, but can everyone just tell me, are you a day trader, a swing trader, an investor? What kind of trader is everyone here? Swing, options, swing, investor, short term, swing, okay. Swing investor, day trader, short term, okay? All right, good. So I want you guys to understand something. There's a big difference from swing trading and investing and day trading, okay? Day trading is you're in and out the same day. You just make your day's pay and that's it. That's what day trading is. Swing trading is a little bit more riskier because you have to hold the positions overnight, and there's a little bit more research that's involved. Okay, investing is what we call slow growth, where you'll make money for the long term, but it's something holding for a very, very long time, and it could become very risky. Listen, I don't know if you guys ever survived the 1995 crash, the 2000 internet bubble crash, the financial crisis in 2008. There's a lot of things, but investors try to focus on making their 20% a year. Day traders focus on making 2% a day, and swing traders kind of focus on, making, a little bit more. But once again, wherever you make more, you have to risk more. Now, following the money, this is the next thing that's this is going to help all of you to become a better swing trader and investor. Okay, a lot of people are very negative about day trading because they feel like it's very risky, and they feel like it's gambling. And believe it or not, day trading is actually the least riskiest trades out there. Okay, because you're not holding positions overnight. And the thing is this: if you watch the New York Stock Exchange or anybody that's trading, they're all day traders. Okay, they're just trading over the course of the day, and by understanding what's happening during the day will trickle down into your swing trades and investing. Because by seeing what's happening at that moment, you'll know and you'll see it constantly build up. So for some of you that do swing trade or invest, you will understand why these things move the way they do by what I'm about to show you right now. So let's follow the money right now. Now here's my question for all of you. Does any of you guys, any of you traders, do you see who's buying and selling the stocks that you're in? Do you know if there's buyers and sellers coming out in a position that you're in, knowing what they're doing? Just give me a yes or no. So far, every single one of you said no. All right? One last question. Level 2 doesn't show it to you, Ruth. Okay? All right, one last question. What would it be worth if you were able to see 70% of the volume of a stock that you're trading? What would that be worth to you? How much better, smarter, and more money would you make? It would be good, a lot better. Hey, what's the worst thing could happen? You follow people buying and selling it? Remember, ladies and gentlemen, I tell everybody, we're just the ants on the floor. We're just trying to get the crumbs. All right? So let's talk about something called level 3, which is not level 2. Actually, the legal term for it is called total view. Now, when I first started, I tried to swing trade. I tried to invest. I didn't know what the hell I was doing other than I wanted to trade the market. But when I first met my mentor, the first thing they taught me this is, okay, Fausto, look over here really quick, and let me show you what we do all day. Because once again, remember I told you this, my father always told me, you want to be good at something, find the best people in the business that teaches you. And that's what I did. I live here in New York, and I went out of my way, spent countless hours, days, took a job working for nothing to learn from somebody to teach me how to do it right. And this is the first thing, this was my first wake-up call, which showed me everything I was doing was backwards. Now, let's just look at this really quick, ladies and gentlemen, and let me just fix something here. See if this works. All right. So these are the buyers, and these are the sellers, okay? These are the amount of shares he wants to buy. These are the amount of shares they want to sell. This is the price they want to buy it for. That's the bid. That's the price they want to sell it. That's the offer. Now, when you look down here, first thing you notice is this 71,000 share seller at $29.50. Now, does everyone here know how to read a chart? Everybody here know how to read looking at a chart, ladies and gentlemen? I know it's a dumb question. If you're coming from Mark Aiken, of course you do, right? Okay, good. Well, the question is this. Who's making that support and resistance level? Where is that support resistance level coming from? Where is it getting that data from? Well, that data is coming from buying and selling. Okay, so when you start implementing your buying and selling, this is what's going to show you who's buying and selling it. So these are limit orders that are out there. So now when you say, looking at a chart, and you'd be like, oh, look at that resistance level right here. Why is that a resistance? Well, that resistance is made from that big seller out here. So it's as simple as that, just by understanding and having a game plan of knowing where the buyers and sellers are. So let me show you for here an example. Here's a little bit of a strategy right here. And if you look right here, ladies and gentlemen, you can see that that is a major resistance levels right there. So now what happens, the stock goes down, hits support. Now it goes back up. And what happens, most people would think like, well, because it's resistance levels here, what should happen here, ladies and gentlemen? What should happen at this price right here? If you're at resistance levels here and now you're here, what should the stock do? Go up or down? That's right. In theory, it should go down, right? But in reality, you have 2,000 share seller at 298, and you have a 75,000 share buyer at 297. So think about this for a second. What do you think the price of the stock's going to do? Go up or down? All of a sudden, everyone just turned their tune. Because this is an important question, and this applies to everything. How do stocks go up and down in the market? Supply and demand. Remember that. So now when you're looking at this, you're looking at the data, and now you could see, well, when it comes to supply and demand, that's a hell of a demand out there. All right? So that was one of the biggest wake-up calls that came up, and this is what we call here, this is what we call them at CyberTrade University. We call those iceberg orders. Okay, that's a lingo that us traders use. We've been using it for years. We've been calling them iceberg orders. Some of them call them big block orders. But when you get a substantial order like that, we call that an iceberg order. Now, who's making these iceberg orders? Well, these are the institutions. These are the big market makers. They're out there putting these limit orders out there. Rich has a question. By both parties meeting, the deal is made. Well, that is if somebody agrees to sell it to him. But if that guy can't buy it, if no one's willing to sell him the 70,000 shares, well, Rich, there's only one other way where to buy it. He's got to execute everyone on the offer. And if he does that, guess what? The stock's going to go a hell of a lot higher. All right? So you just got to keep an eye on that. Like here's another example. Stock right here. Oops, sorry about that. Okay. So here you have another example of a major resistance levels right here. And, you know, don't look at this resistance levels, but now the stock is trading at $6.62. Well, if the stock was to go up and hit support levels here, well, majority of the people would say the resistance level is $6.95, also $6.70. But the thing is, how do we know which one is going to hit first, or which one is more of a predominant resistance levels? Well, when you look over here at 675, you got a 45,000. Sorry, I'm looking at something else. A 45,000 share seller out there. Now, understand something. Can we break that? Can we go past that 675? Of course we can. But two things have to happen. That guy has to cancel his order, or he has to get executed. And the only way you know he gets executed is through time and sales. That's that little window that shows you all the executions that are going off. So understand something, ladies and gentlemen. If you're able to see a stock, and if you're a swing, which a lot of you I see are swing traders and investors, but time to time you're looking at a stock during the course of the day, and you're thinking, you're contemplating, you know, do I jump into this stock? Is it really for me? Is it ready to time to buy? Are these indicators starting to kick in right now? Well, why not check and see if there's buyers out there and see if those orders are out there? Because that is where you're going to learn that stuff and see it. Like this example right here. You're looking at an intraday chart, right? This is a good swing trade for a lot of you guys. Here you're looking at an intraday chart and you're seeing the stock trending up and it's been going up nicely all day, you know? But then when you look at the chart and all of a sudden you'd be like, well, a lot of resistance levels there at 1050 when you're looking at over here on the long-term chart, right? Well, how do we know if that's really a resistance levels? Well, when you look at it, 12,000 share seller at 1110, 10,000 share at 1120. So you definitely do got big orders out there. You don't have a lot of buyers out there, even though things have been going up nicely. But some of you probably sit there and ask yourself, well, what, like, did you ever stop and look yourself in the mirror and say, why is this stock really going up? Like what is really making this stock up? Because I could tell you this is definitely not Mr. Fibonacci doing it. All right? He's dead. All right? Why is it really going up? Who's really driving the stock up? What is making this thing really work? Once again, how do things go up and down? Supply and demand. So now you could see it. And how many times have you, like, think about it. How many times have you went out there and all of a sudden, once you buy a stock, as soon as you buy it, the thing goes down. And you're like, and then as soon as you sell it, it goes up. And you like, sometimes you think like somebody's watching you, right? Well, they are, because by you putting orders out there, you don't even realize that your order is being advertised and being exposed. Something that I also learned being a trader. Richard says it happens to me all the time. Rich, you know what? Thank you for admitting it, because not too people are brave enough to admit that that happens. Because I know it happens. Listen, it happens all the time. You know, with everybody. Part of the game. Once again, who really taught you how to trade the game? Because what you don't want to be is the self-taught individual. Let me change the slide here. Okay. So here we have the same position of the stock. You can see how here's the stock going up. And not a big iceberg order, but there is a 2,200 share seller compared to 200, 600, 300, and 400s on the offer. And then you look at the chart here and you're like, well, why did the stock hit a resistance level back in September and went right back down to 8? Now it's back to that same resistance levels. What is making that resistance level? Who is actually making that stock hit that resistance level at, you know, the 1190? And not even on an intraday you could see it. Well, when you start looking at those orders, you could see that somewhat of a big order out there, not a major, but somewhat at 1190. And there's things that are called refreshing. Maybe he's updating his quote. It could be more than that. Remember, not everyone's really always telling the truth. A couple of questions coming up here. Bill says some of these iceberg orders melt away before actually trade, fake orders. Well, Bill, first of all, there's no such thing of a fake order, because I don't think a brokerage firm will never allow you to put an order out there unless you have the money in the account. So there's nothing fake about an order. Okay, those are real orders, and anyone can get executed at any given time. That's number one. Number two, can he change his mind and cancel his order? Of course he could. You do it all the time, don't you? How many times you placed an order and said all of a sudden, like, you know what? Change my mind. I want to own it. I want to keep it. And it, you know, sometimes it works in your favor. Sometimes it doesn't. But they don't. You know. But how they melt? I love that word. That's a nice word. Well, the way you know if they're melting means that somebody's buying it from them, and that's where time and sales come into play, Bill. And that's something I'll show you guys tomorrow for the ones that want to come and join me at 12 o'clock. And if you, once again, it will be recorded, so you'll be happy to come and join me for that. But those are all great, great, great questions. But seeing it on a slide, a little bit different than seeing it live. One last big iceberg order right here. Okay, look at this stock right here. Major resistance levels at $5. Everyone see that? Major resistance levels right there. And you can see how the stock went to 5, it came back down. Now it's going back to 5. And the reason, look at the time right here. You see that? Look at all the time and sales. See this little red right here? Those are people getting executed on the bid. Every transaction that's happening is on the bid. Look over here on total view. At $5, 14,000 shares. At $5.10, 13,000 shares. You don't see that on the bid, but you see it on the offer. And watch what happens when we change the slide. Oops, I'm sorry. Kind of went to a different one. I thought I had a repeat of that one. Nope, actually, no, I didn't. I thought I had this sister slide to that. But what happens here is this stock, I had actually a slide. I'll have it tomorrow. But the stock actually drops right back down to 460 because the sellers are out there. And to answer one of your questions, you could see right here by seeing all those transactions happening on the bid. By the way, I don't know if you guys know this, but a lot of the data and all the data you're getting from the chart comes from the time and sales window. Will you sell out emails at 12? Well, basically, Rich, at the end of this presentation, if you want to come and join me, I'll give you the registration page. You can come and join me today, tomorrow at 12 o'clock. Just register for it. But I'll let you know at the end of this presentation, okay? What's the difference between level 2 and level 3? About 20 times more data. Level 2 is only showing you, Gerard, the best bid and best offer. But there are other bids and other offers out there that brokerage firms and mutual funds and hedge funds are looking to buy at other prices. Level 2 is only showing you their best bid and best offer. It's not showing you all their bids and all their offers. That's the major difference. And it's over 20 times more data. So next thing, now, any questions so far about the supply and demand? Any other questions before we get into about how do we find stocks to trade? Got about 15 minutes. Just give me a yes or no. I want to make sure nobody's sleeping on me. Oh, we got somebody said a yes. All good. Could you comment on dark pools? Yes. Okay. A dark pool. By the way, if you want an article, I'll give you my personal email address here. FAUSTOPSCTU corp.com. I'll send you guys if you send me an email, I'll send you an article on dark pools. Dark pools are basically orders. They came up with this ugly name. It's basically orders that are being traded within the brokerage house. They're just crossing trades. That's all it is. So if you deal with an online broker, basically they're selling you stock. They have an inventory, and the inventories they're just crossing with another account in their brokerage account. They're not even going out in the street and buying it to you. They're not getting you the best execution. That's basically what a dark pool is. All right, Win? Now let's talk about how to find stocks in the market. Well, let's talk about about some stocks that have moved in the market and tell you how we do it. Now, basically, I've been trading for 20 years. I love what I do. I have a passion to do it, if you haven't heard from my voice. I love people making money in the market because I'm sick and tired of seeing people giving it to someone else thinking that they're making 5–10% on their money because there's no need for that. Why you got to give it to somebody else? You could do it yourself. Because remember, nobody is going to care about your money more than you. Okay. Now I want to look at some of the stocks over here that made some moves. You could see here. This is a couple of tweets that we did on some certain stocks right here. IBIO, Lake, APT. Basically, I tweet and I text. I run a professional trading room, and all of you guys are more than happy to join and watch what it's all about. But let's kind of show you of a text and a Twitter alert that I did on Lake at 10:01. All right, stock was up about $1. You could see here, these are some of the stocks that we were looking in our Twitter and text messaging. And when you look right here, ladies and gentlemen, Lake went from $10 all the way to $27 a share. Now, if you look at this arrow right here, does everybody see that arrow right there? See that see those bars? Okay, one thing I also teach at Cybertrade University, which I'm going to be doing in another presentation, I teach something that's called FF flags. They're called Fausto flags. I show you what's consolidation on a chart. Some people think they're called bulls and bear flags, okay? We call them FF flags because it's a little bit different. People, if you ask anyone what a bull flag and bear flag is, they don't even know. Okay, they just, oh, that's a flag. It's going to go up. There's a reason why it happens. So, but you could see that it had a nice little FF flag right there, and the thing went from like $10 to 27 in 4 days. All right. Here's another stock, APT. Stock went from $3 to $11 in 3 days, up 300%. All right. Have any of you guys ever been in a stock that was up 100, 200% in a day? Anyone ever been in one of those stocks? Okay. IBIO up 400%, 75 cents to about $3, okay? So the thing is this. What do all these stocks have in common? All right? Did anyone hear about any of these stocks? Anyone ever heard of them? Nobody? Nobody heard about any of these stocks. Pretty big winners though, right? They all have something to do with this. Ebola. All right? Not this little ugly little strand right here. Now, Lake makes the suits that protect people from the disease. APT also makes those rubber suits that you see the people walking around in. So all of a sudden, because they had the patent and they had the suit, their business went off the roof. All right. The other stock, the little cheap one that you saw, the IBIO, that stock was actually one of the antibiotics pharmaceutical companies that makes the drug to prevent people from to get healthy from Ebola. So the point is this, ladies and gentlemen. As traders, the way traders work, we're in the business to make money, okay? A lot of you here probably were so upset what happened in 2008, well, how the government had the right to give our money to these banks to bail them out and get into this whole subprime thing, right? Who here was happy with that, okay? But the bottom line is, if there's anyone more angry than me, I mean, giving my hard-earned tax money and not even asking me to bail these banks out. Well, guess what? As a trader, that was probably one of the most profitable months that I had in years. Buying, Citibank at $1 and a penny? Are you kidding me? A lot of people say, oh, Fausto, you trade inexpensive stocks. Well, there's nothing wrong. They're not small-cap stocks. Citibank is not a small-cap stock. Sirius Radio right now is not a small-cap stock. You could have bought Sirius Radio at 18 cents back then. Where's it today? $3.50? Not bad for a day's pay. Bank of America, big winner. I mean, a list can go on and on with all these companies. So anyway, unfortunately, catastrophes make opportunities. Living in New York, a lot of you are very familiar. We got really destroyed with Hurricane Sandy. Took our business down for about 3 weeks. We were out of business for 3 weeks. Gas that wasn't around, all this damage that happened, what ended up happening, what did everybody do? They went out the next day, they cleaned out every single generator company out there. Generators companies Generac went out, tripled in 1 year. Home Depot, doubled, tripled in a year. So the thing is you have to look at is traders, the way we look at it is we look for opportunities like this. And, once again, do we own them now? No, we're not. That's what day traders do. We'll buy it, we'll make our day's profit, and go from there. Any of you guys trade on Fed Day? Anyone trade on a Fed Day? And you're like, wow, what's going on Fed Day today? Today's Fed Day. Ooh, it's Fed Day. It's Fed Day. Well, what does Fed Day really mean? It's an opportunity that if they raise interest rates or lower them or do nothing, it's going to make the market move. Does that, and that's the way you look at it, and this is where it's going to help a lot of you on a swing trade. By seeing what's happening in the day trade of that is going to help you to realize to move forward if you want to continue with your swing trades or you're investing. Now, potential income, ladies and gentlemen, 1,000 shares, 50 cents, 20 trade days a month. There's a very, very good income when it comes to trading. I mean, how many of you here are on Social Security? It doesn't pay enough. How many of you here are, trading in the, basically too qualified to go back to work? It's a lot of you out there. The market mover, that's right, Rich, the market movers are very, very important. It's okay to be a follower. You don't have no choice. So how do we learn? Okay, well, the number 5 rule is why you're all here. Every single one of you need a mentor. Okay, if there's any advice that I can give you, Mark has me here for a reason, and Mark does these events all the time, and he loves to bring, one of the best contributors in the education business because, being and following Mark, a lot of you guys understand that, he knows he's not, he can't teach everything. And everyone has a niche, and everyone likes things differently. But the reason why he's here is that every one of, and the reason why I'm here and he had me here is every one of you he knows need a mentor. And Mark will be the first one to tell you, and every other, and nobody should tell you different. Great traders never stop learning. Never. I learned about 2 or 3 things from Mark when he came to speak on CyberTrade University. What do you think? You think I go out and think I know everything? That's not a guy you want to learn from. If anyone here goes to any of the expos or any of the trade shows, and you could follow us, you'll see us. I'm sitting in the audience taking notes. Hey, if it's going to help me get better, why the hell not? So once again, every single one of you need a mentor, and the way I look at it is every one of you here are just interviewing, trying to find the guy that's going to do it for you. Now, you could follow me on Twitter, ladies and gentlemen. I got some great videos on YouTube, training videos. You could actually see my morning and afternoon meetings that I've done. Feel free to check it out. You also can follow us on Facebook and Twitter. We have a lot of great places that we try to market CyberTrade University to try to give you guys ideas. But once again, be careful what you watch and listen, because once again, just because we talk about something that's moving doesn't mean you're going to get at the right place at the right time. So how do you start learning today, ladies and gentlemen? Well, just really quick, I want to point something out for everybody. Before I tell you about how you could join me or maybe learn a little bit more about CyberTrade University, I just want you guys to know that CyberTrade University does more education for any brokerage firm in the industry, being in business for 20 years. And I know there's not too many people that could say that and will have a reputation in the industry doing it for that long. Now, like I told you earlier, I was ranked 12-time champion at the Money Show. Also, we were ranked #1 school by Equities Magazine 6 years in a row, which we're proud to say. Now, let's become better traders. How do we do that? Well, I got 2 great offers I want to give everyone. All right, I want to offer all of you guys a 1-day to come and join me for my free webinar that I'm going to be doing tomorrow and Friday. All right, it's going to be a little bit different. I'm going to talk a little bit about more discipline and stuff like that. And also, you're going to be able to join me and watch the live trading for 1 day. Or, if you want to really do it right, buy my book for $49, and I'll give you 2 weeks free in my trading room. Okay. Now, this book just lets you know. It's the first book that's been out on day trading in 20 years. And Wiley was very ecstatic. They've been bothering me for about 10 years to write it. Just don't have really had time to do it. But it's a fast read. It's a great read. And if you buy it through CyberTrade University, I'll give you 2 weeks in my professional trading room. So you'll get literally over 100 hours of education of seeing what's going on in the trading market, okay, where we're open from 8:30 in the morning to 4 o'clock in the close. So you got 2 great offers here. And what you could do is you can give us a call here at 877-70-CYBER. Talk to one of our education advisors at CyberTrade University. They'll be happy to help you. All our employees at CyberTrade University are all traders. So one of the good things that you get to learn is by coming here to CyberTrade University, you're going to learn a little bit from it. You'll be able to ask questions, and you're not just dealing with some, answering service company. So basically, if anybody would like to register for any of those 2 events, the fastest way to do that is I'm going to bring up my website right here. And it's going to go to cybertradeuniversity.com. And right there on the home page, you see where it says the book? Just click on that link right there. And you'll be able to register right there, and you'll get a little syllabus of what you're going to be learning and all the bonuses. The moderators, we talk about options. Greg McDermott, we talk about Forex. We run events running all day during the day. So a lot of great content for you guys to learn. And if you feel like, you're not really ready yet, Fausto, no problem. Go to the slide number 2, and you can register for the 1-day active trader event. Just fill this out, and we'll get you registered for Part 1 and Part 2 for the live trading. So you have 2 great events. Now, does anyone have any questions in the meantime? I think like we just made it to our hour. That's great. Any questions? I tried my trades as a job. I never stopped learning. Well, Richard, I'm glad you share that, and it's true. I mean, listen, Tiger Woods, one of the best golfers ever lived, he's got 12 coaches. Okay, any basketball player, even, Peyton Manning, he's got coaches. So the only thing that all us speakers and all us educators always want to kind of tell everyone, but please don't be the guy that's going to be the self-taught individual, because it's going to cost you in losses. It's not worth it. Any other questions, ladies and gentlemen, that I can answer? Oh, and by the way, if you do register for my book, I'm going to throw a bonus in there for all of you. If you buy my book, ladies and gentlemen, I will give every single one of you a personal consultation. When you call in, say, listen, I want to talk to Fausto, book an appointment, and they'll be happy to talk to you. Listen, I'd rather give you the advice and talk to you and spend, the 5, 10, 20 minutes with you than you go out there and, try to find the hard way. So as a bonus for all of you, if you do register today, you'll get the opportunity to talk to me personally, and that's my gift to you. What do we look for in pre-market trading, Terry? Well, Terry, there's a lot that we look for into pre-market. First of all, we look for percentage gainers and losers. We find stocks that have good volume, good trend, and big block orders, people bidding it up. It's a lot that we talk about in that pre-market. There's a lot that goes on there. Here, let me just, I don't know if you guys got the link for CyberTrade University, but you should be able to see it in the chat. There you go. Any other questions that I can answer? If you do, just give me a quick yes so I can just have a heads up on it. If not, just give me a quick no. Just give me a yes and let me know, and you can start typing it in. Okay, if you have questions with a yes, Kent, you have a question? Go ahead. Now, what link do we click to register to order to get the consultation? Okay, just click on this link right here, and I'll put this in there for you right there. Just click where it says that link right there. That's the one. If you buy the book and you get the 2-week trial, what I always recommend everybody to do is sit in the trading room for about a week and just get to see and meet the students, see the hundreds of students that are in a professional trading room. I basically build a professional trading an online, it's like almost an on-site proprietary trading room, a professional, trading floor. That's basically what it is. So if you click on that, that's how you'll get registered. Do we have to cancel 2 weeks trial? Larry, listen, you don't have to cancel. It cancels automatically. You're not going to be billed and have any surprises of a consistent, we're going to charge you $200 after that. None of that. Listen, if you want to move forward, CyberTrade University, Larry, we'll move forward. You want to move forward? If you don't believe it can make you money, don't worry about it. Keep the book and enjoy it. But I can tell you this. You know what? I can give everybody a guarantee, all right, on what you're going to buy. I guarantee you that I will show you a minimum of a 20% mover every day. You might even see 100% movers over the course of the day. But I will show you 20% movers every day. And if I don't, call us back, I'll give you money back. That's how confident I am with that I can prove to teach all of you how great trading is and what a great value you're going to get. What platform do you use to do your pre-market research? Rosa, every brokerage firm has all offer it. I mean, Thinkorswim, TradeStation, Schwab, they all have it. Just need to know how to read it. Fred, once again, when you call the office, this is what we do. I know a lot of you guys are starting to, like Fred's asking me, which brokerage firms offer the level 3. What I recommend you to do is this. Before you talk, as you're registering and purchasing the book, talk to one of the education advisors. They're going to ask you some questions because every one of you are a case-by-case basis. It's like, say, I got a fever. What do I do? It's not just taking Tylenol. You might have something more serious than that. So the thing is, every one of you needs to talk to one of the education advisors at CyberTrade University, and that's the gift that you get by being, buying the product. And, we give you a very good consultation. And then, once again, once I get to know a little bit about you, I'll be able to advise you what would be best for you. Okay? Thinkorswim doesn't offer it. it's a great platform. I do a lot of education with Thinkorswim, but the thing is, you're going to have to go to the exchanges and buy. It's cheap. It's like $15 a month. It's not a lot of money. All right. All right, ladies and gentlemen. So with that said, first of all, I'd like to thank Mark Schenken for having me here. It's been a great event. And, you know, like I said, I look forward to teaching you all. If whoever doesn't buy the book, you can still come and join me for the free webinar event that I'm going to be doing on Thursday and Friday. Just remember, if you call in now, just make sure, first come, first serve, in a way of booking an appointment with me. So, you know, make sure once you get registered, talk to your education advisor. I'll be happy to talk to all of you, whoever purchases the book. Once again, if you move forward Cyber Trade University, you don't, at least I want to advise you guys to do the right thing, because this is the cheapest trade you guys can make. All right, ladies and gentlemen. So once again, thanks for coming. I hope you guys enjoyed it. Hope you guys learned everything. And, you know, once again, keep on trading, and hopefully see all you guys tomorrow. Thanks, Mark. Thanks Schenken Analytics, and everyone else. Happy trading.